What's up, guys? JJ Fade 23 here. I'm just going to do a little recap of Lucy. First things first, gap stats. All right, let's turn these gap stats on. All right, I just usually use 10 years. Just, I don't know why. It's probably maybe better to do 5 years, but I usually use 10. We'll look at them both. 5 years, only 2 gaps, 67%. 10 years, 2 gaps, 67%. It spikes a lot, but not many gaps. So you see he had a gap right here, closed red. He had a gap right here, closed red. These weren't really big enough gaps. That was just spike. No gaps. Anyway, so it's gapping up. It's running in the pre-market. It's a micro float. So I'm marking off my levels in the pre-market. First of all, I'm not trading this. It's a micro float, all right? With a lot of volume in the pre-market. It's holding this trend line. I'm not trying to trade these micro trend line breaks in pre-market on a micro float. That could just... Remember when I told you guys, you don't want to really trade the trend line break that can just bounce back off a level right below it. The trend line break is when it's extended and it has no levels right below. Like, remember when I was talking about pre-market high, trading the trend line break that right back on pre-market high? Look at this. What do stocks do? They break out over this level, then they hold that level, then they break out over this level, then they hold that level. They break out. Old resistance becomes support. So I'm not trying to trade this trend line break into these little levels on a micro flow, especially as it gets closer and closer to open. When you're thinking in your head, okay, look at the daily chart, right? Look at all the spikes on this thing. Look at the spikes. Look at the spike. Look at the spike. Even this, look at the spike. This tells you that it spikes at the open. You don't need to trade in the pre-market. The stocks that I trade in the pre-market are the stocks that every candle looks like this. Every daily chart looks like this. Maybe has a tiny little pop in all red. They don't spike at the open. They don't spike at the open. They don't spike at the open. 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 So you look at this, you see all these spikes, you know you don't have to take the entry in the pre-market. That's all there is to it. This daily candle is telling you it opens and then it spikes. It opens and then it spikes. It opens and then it spikes. And I try not to feed FOMO. So anyway, we're back to the chart. Oh, first we got to mark off the rest of the levels. All right. So we had the gap fill. This is what I was talking about pre-market. We had the gap fill right here. 425. 435. Very strong levels. Gaps. Very strong levels. Gaps are very strong. Now, at the open, this little pop and fake move down is to make people chase. We don't fall for that in JJ Fade 23. And then we get the max extension into the gap fill, which you could have had a limit order just sitting there. I didn't do that. It went up. It gave back this whole gain. Number one, it couldn't hold the pre-market. It spiked. When it pulled back, when it filled below the gap, it couldn't hold above the pre-market high. All right, it broke below that, and it gave back this whole move pretty much. So right there, I didn't draw my fibs on, but I know where my fibs are by heart now. So that's why I started shorting right here on the bounce, right here, trying to get up to the 61 fib with my stop up here, and that's what I did. I didn't add right here because it was a microflow and it did help multiple times, but we were waiting for that fake move up. We were saying it on the microphone. We want to get this bullish structure to make a fake move up and then dump. And that's what happened. Now, because the fact of the daily chart having so many levels below, look it. Level at $4. There's another level here at $3.35. There's another level here at $3.10. Because there was so many levels before and the flow and everything, another level right here. I didn't think it was going to be an all-day fader. I wanted the, I wanted the 1 minute 200 and the 5 minute 200. Now I want to show you something. I didn't add on the 38% bounce even though it was after 1030 because it had too many levels. Now look, all right, it comes down to here. It has multiple levels of support right here. Now, if you have your fibs on here, right, you don't want to add at the 38% fib after it just bounced off all these levels of support. Not to mention, I usually like when my fib lines up with a daily level, like here. If it went back to the 61% fib, which I usually keep purple, but this is my laptop, so let's color this for a sec. 61, I keep it a different color so I know which one it is just automatically. Now, that's also the $4 whole dollar level, and that's also a pivot. So if this bounced up to here and it didn't already have all these levels, we don't remember, you don't want to be, you want to trade bounces before it goes back, before it hits support levels, because that's where it might go. But then once it already goes there, it's not as safe. And the other thing about adding, all right, is this. We don't want to add while it's going up. And then if it keeps going, we're screwed. We want to wait for it to reject like this, show that it breaks the most recent support, and then bounces back up close to that level again to add for the lower high, and then it comes down. That's always how I add now. I never add while it's going up into the first level, like the first time. You know, like, so even right here where it rejected and broke this trend line, I probably wouldn't add right there unless it was like the biggest piece of crap ever with the best gap stats and no levels below. But even still, I like it to fail, come back up like it did right here, close enough to this level to give me good risk reward, then add for the move down. And as you can see, let me turn on the volume. Shut off the gap stat. Shut off the Squeeze Pro for a sec. Now see this? This move right here was bouncing. It was on like no volume, but then as you see over here, look at, you start to get this volume coming in, and then as it breaks this level, squeezes. That's right where I got stopped out even. Big volume comes back in and it rips. But then again, right? Let's shut these off. I was saying this on the microphone. We had also on the daily chart, we had this upper trend line level that I was saying it might want to go to, which it came pretty close. Didn't actually touch, but it came close. But it did have this little consolidation area over here. Little weird pivots. But anyway, once it feels back below $5 on that big squeeze, all right? Look at this. Again, I was saying this on the mic. This is a huge stuff candle. 1.5 million shares of volume. This is pretty much the top almost every time when you see this. Massive trigger, and then again, a perfect 61% bounce to enter on. If you didn't catch this because it happened so fast, you just slap your fibs on here. The volume was elevated enough. And look at this. Perfect 61% rejection. You short that. I was even saying on the mic I should short this right here, but I'm not going to. That's the best way to enter. And then you get the fit. You know, the reason why I didn't short that right there is because, look, even if you get into 61% fib, all right, let's say you got in at 510. The high is 550, all right? That's 40 cents. So you got to risk a little above that. Let's call it 45 cents, all right? That means you need 90 cents just to get a 2-hour trade. So that means you need to get it all the way down to $4 with only like an hour and a half left. You know, so that's not worth it to me risk reward wise. I don't like 2-hour trades. I want 5, 6-hour trades. I'm not going to take a 50-cent risk here with only like 2 hours left in the day and, you know, on a micro float. See, most people aren't constantly thinking like that. I'm always thinking like that. Most people are just going, oh, I'm going to jump in right here. They don't even think about where their risk is. They don't even know where their target is. I'm always like, dude, 45-cent risk. That means I need $1.40 at least. You know, I'm not going to get that right now. So I'm just going to take the chance of this for it to get 2R. No, I'm not going to do that. But anyway, that's besides the point. But that was a perfect, again, 61 fib bounce. And yeah, it fell back below the $5 level. It popped up, failed it again. Multiple fails here, and then you get the crack right here. And it never made it to the 5-minute 200. It almost after hours, but it did make it to the 1-minute 200, which was the first target. So you just got to remember, all right? Look at the daily chart. Does the daily chart tell you the stock spikes a lot after the open? So you don't need to trade it in the pre-market, or is all the big red candles just sell off with no topping tails? That means it doesn't spike. That means if it has great gap stats and not that much volume and it's not a micro float, you can take it in the pre-market if it's extended into a trigger. But when the stuff's moving very strong and bullish with a lot of volume and it's a micro float and it shows the daily chart pops at the open all the time, you just don't need to. Just wait for the open. I mean, the thing was up 150, 60, 70% at the open, 108%. You didn't need to trade it in the pre-market. That's just, you know what I mean? The chance of it just like rolling over and dying with a micro float and those kind of topping deals on the daily, just, yeah. So that's pretty much it, you guys. Any questions, let me know.